Good afternoon. It is Tuesday, November 14th, and here's another market update for you. We just received this morning an updated CPI figure, which is the Consumer Price Index. Remember, it's one of three inflation indexes that we've been watching for the past couple of years. This one measures consumer spending, and the report this morning came in better than expected. Last week we got the Fed's decision to pause on rate hikes, and we saw them starting to soften their language, and now we're getting more evidence today that there's additional signs that inflation is easing. So today's report came out with a 0% monthly increase in inflation, which is rather remarkable. It puts the annual headline inflation number at 3.2%. which is not quite where the Fed wants to be, but we're moving back in that direction. More importantly, however, is the core inflation number, which is the number that the Fed pays the most attention to, because remember, it strips out the volatile energy and grocery costs. Headline CPI includes the volatile energy and gas prices and grocery prices, which the core strips out. So the Fed is paying more attention to the core number, but that also came in better than expected. It came in at a 0.2% monthly increase, which if you were to spread that out over a year, or amortize that over a year, I should say, we'd be in the twos. However, currently that brings the core annual inflation number down to 4.0, which is still well above the 2% target, but we're making progress every single month. I think that's like 5 months in a row now that we've seen the core inflation number improve. Within the report, though, we're looking at certain things that are also indicating improvement, and the big one that we're really excited about in this report, something we've been talking about for a long time, is we're finally seeing meaningful improvement in the shelter costs. So shelter costs are still rising, but the speed at which they're rising has slowed dramatically, and that is in and of itself contributing to a reduction in the core inflation number. And we believe as the shelter costs continue to moderate, that's actually going to, hopefully in the very near future, actually start bringing inflation down faster. So where we're at now, we've got the producer price index tomorrow, which is another one of the indexes we look at. It's probably the least important of the three, but it shows what producers are paying for goods, and it's kind of a leading indicator of what we might see in the CPI report in future months. So that's coming out tomorrow, and then we largely go quiet until after Thanksgiving. But again, this is a good day. This is a good conversation to have with our clients. Rates are improving today. The 10-year Treasury is down to around 4.45, which is a substantial reduction from yesterday. In the past couple of weeks, we've seen interest rates come down between 0.5% and 0.75% in rate. So be sure to share that with your clients. Anybody who's sitting on the fence should re-engage with their lender. They should start talking again about where they're at, because the numbers have improved dramatically in the past couple of weeks. If you want more information, feel free to reach out. Otherwise, have a great day in KFA.
Welcome to the KFA podcast, where our mission is to keep faith alive by kicking ass.